Bitcoin emerged as a decentralized digital currency, offering a new way to conduct transactions without intermediaries. It challenged traditional banking by providing transparency, security, and lower transaction costs. This innovation sparked a global interest in cryptocurrencies, reshaping financial landscapes and prompting discussions on the future of money. Bitcoin emerged in 2009, introduced by the mysterious Satoshi Nakamoto. It marked the beginning of blockchain technology, establishing the first decentralized digital currency. This innovation aimed to provide financial independence, functioning as peer-to-peer digital cash, free from government and traditional banking control. In 2009, Satoshi Nakamoto introduced Bitcoin, the first decentralized digital currency, pioneering blockchain technology. This innovation offered financial independence, enabling peer-to-peer transactions without government or bank intervention. Nakamoto's identity remains a mystery, adding intrigue to Bitcoin's revolutionary impact on the financial world. Blockchain underpins Bitcoin through a public ledger, recording every transaction transparently and immutably. This decentralized network of thousands of nodes worldwide ensures security and validation without central authority. It facilitates trustless transfers, enabling direct peer-to-peer exchanges without intermediaries, banks, or third-party verification. Blockchain technology enables trust without intermediaries by using cryptographic proof. This innovation allows secure, direct transactions between parties, eliminating the need for banks or third-party verification. It ensures transparency and security, fundamentally changing how we perceive and conduct financial exchanges. Bitcoin's market evolution showcases its journey from a niche digital currency to a mainstream financial asset. Initially valued at fractions of a penny, Bitcoin's price trajectory reflects growing institutional interest and adoption. This evolution highlights the increasing sophistication of trading infrastructure and the pivotal role of institutional participation in stabilizing and maturing the market. In 2010, Bitcoin's first real-world transaction involved 10,000 Bitcoin for 2 pizzas, setting its initial value at fractions of a penny. By 2024, Bitcoin reached $100,000, reflecting significant institutional acceptance. In 2025, the price stabilized around $94,000, supported by advanced trading infrastructure and increased institutional involvement. January 2024 saw United States regulators approve Bitcoin exchange-traded funds, leading to over $50 billion in institutional capital inflows. This allowed traditional investors to gain Bitcoin exposure without custody issues, enabling pension funds and 401k plans to include Bitcoin. Exchange-traded funds reshaped Bitcoin's price dynamics, creating new demand patterns and reducing volatility through diversified institutional flows. The Bitcoin price cycle is evolving. Historically, price surges followed halving events, but 2024 saw a shift. Institutional investments, driven by exchange-traded fund approvals, altered traditional patterns. Prices peaked before the April halving, challenging established timing models. This shift highlights the growing influence of institutional capital on Bitcoin's market dynamics, disrupting the predictable 4-year cycle. Bitcoin's traditional 4-year halving cycle, where price surges typically follow 12 to 18 months post-halving, was disrupted in 2024. The price peaked before the April halving, challenging established models. This shift was driven by institutional factors, such as exchange-traded fund launches and institutional investments, which preempted typical retail market behaviors, altering the cycle's dynamics. The 2018 initial coin offering crash and 2022 FTX collapse highlighted Bitcoin's resilience amid severe bear markets, exposing systemic vulnerabilities. By 2025, major economies enhance regulatory clarity, reducing risks with clearer frameworks. Anticipated interest rate declines create favorable conditions, potentially increasing Bitcoin demand among yield-seeking investors. Bitcoin's price evolution signifies its growing maturity and institutional adoption. Unlike traditional 4-year cycles, market dynamics now reflect broader economic factors. This shift highlights Bitcoin's integration into mainstream finance, driven by increased regulatory clarity and macroeconomic conditions, positioning it as a viable alternative asset. Bitcoin's current price of $94,335 reflects a mature market with reduced volatility at 5.9%. The Fear and Greed Index ranges from 48 to 56, indicating neutral to bullish sentiment. With 60% of recent days closing positive, these indicators highlight steady institutional interest and Bitcoin's evolution into a legitimate asset class. Bitcoin's current price stands at $94,335, reflecting mature market conditions. With a 5.9% 30-day volatility, the market shows stabilization. The Fear and Greed Index ranges from 48 to 56, indicating neutral to bullish sentiment. Notably, 60% of recent days closed positive, highlighting steady institutional interest and reduced speculative volatility, marking Bitcoin's maturation as a legitimate asset class. VanEck predicts Bitcoin reaching $180,000, reflecting a conservative institutional outlook. Tim Draper and Tom Lee foresee $250,000, driven by tech venture optimism. Standard Chartered estimates $200,000 based on traditional banking analysis. Chamath Palihapitiya anticipates $500,000 by October 2025, while Charles Schwab suggests $1 million if the United States establishes a Bitcoin reserve. Bitcoin's value is pivotal due to its role as a decentralized digital currency, offering financial autonomy and security. Its limited supply and increasing demand drive its price, reflecting its potential as a hedge against inflation. Understanding these dynamics is crucial for grasping Bitcoin's impact on global finance and its future trajectory. Bitcoin's 21 million cap ensures digital scarcity, a unique feature in monetary history. Halving events every 4 years reduce new Bitcoin creation, enhancing its scarcity. As digital gold, Bitcoin offers portability, divisibility, and verifiable scarcity, making it a compelling store of value. It's increasingly seen as an inflation hedge against currency debasement and monetary policy uncertainty. Bitcoin serves as a geopolitical hedge, offering protection against fiat currency inflation and political instability. Its role in payment innovation is expanding, with applications in cross-border remittances and smart contracts. Additionally, Chicago Mercantile Exchange Group's futures and options markets offer advanced tools for institutional risk management and hedging strategies. Bitcoin's future is shaped by growing institutional adoption and regulatory clarity, setting the stage for potential new all-time highs. However, its inherent volatility demands robust risk management. As Bitcoin's role evolves, the question remains whether it will transition from an alternative investment to a global reserve asset, redefining digital value and monetary sovereignty. Bitcoin's future is shaped by growing institutional adoption and clearer regulations, potentially driving it to new all-time highs. However, its inherent volatility necessitates strong risk management. The ongoing evolution raises the question, can Bitcoin transition from an alternative investment to a global reserve asset, redefining digital value and monetary sovereignty?